Hi friends, in this video we are going to discuss 3 small cap stocks that have been beaten down badly. How badly? Well, these stocks are down by almost 40 to 50% from their all-time high. And the reason I'm speaking about these 3 small cap stocks is because I see early signs of reversals from a fundamental perspective in these 3 small cap stocks. Now, these 3 stocks I'm not issuing as recommendations, although I'm a SEBI registered research analyst, but I'm not issuing these as recommendations. I really want you to learn how to go about analyzing beaten down small cap stocks so that you understand the risks versus rewards. So therefore, I'll give you the positives and negatives about these 3 stocks. Before I start, a big shout out to the partners of this video, Outskill. If you want to learn AI practically, I invite you to an exclusive 2 days live AI training program happening this weekend, Saturday and Sunday from 10 a.m. to 7 p.m. Normally priced at 10,000 rupees, you can attend this at no cost thanks to our partners Outskill. During 16 hours of live interactive training program, you are going to learn how to build a personal AI toolkit with 10 plus AI tools, how to create professional presentations, images and videos in just few minutes, and how to develop AI agents that will give you competitive edge, how to automate repetitive tasks and analyze data without writing a single line of code. Over 1 lakh professionals from 40 plus countries have attended this course and have liked it. Whether you work in tech, policy, business, operations, this program is for you. Seats are limited and are filling fast. So click at the link in the description, secure your spot and join the WhatsApp group for upcoming updates. With that, let's start our stock number 1, which is Reflex Industries Limited. So what you see on my screen is Reflex Industries Limited's price chart. So technically, if you look at it, the stock made a high of almost 587 back in September 2024. And from that point onwards, it's been falling. It's now down to almost 363 level at the time of recording this video, which means around 38% of downward movement from its all-time high. What you note technically here is that the stock has seen some volume here, okay? And this volume is very high as compared to this massive rally that we saw. If you look at these buildings here, green and red candles here, this volume is very, very high. Definitely there is an interest that has been developing in this particular stock, but we need to find out what are the reasons, fundamental reasons for people to take interest in this particular stock. Although this stock is not very popular stock, if you go and look at, for example, the FIs and DIs stakes in this particular company, very, very limited exposure by FIs and DIs. But right now, if you talk about fundamentals of this company, they are looking very, very good. Let me explain to you in the next 2 to 3 minutes. So this company operates in 5 major segments that are on your screen, but I'm going to only focus on ash and coal handling. And there is a reason for this. The reason is very, very simple. If you look at their revenues, in FY25, almost 90% of their revenues came from ash utilization and coal handling. You may say that this is a very, very boring segment, Rahul. Why are you talking about it? Boring companies make you money. If you go and read One Up on the Wall Street by Peter Lynch, he talks about that never chase hot stocks. Look at companies that are very boring. And this actually fits the bill perfectly. Now, let me talk about ash utilization and coal handling and why this is a huge opportunity in the next 3 to 5 years. See, point number 1 is if you look at the contribution of this particular segment into the overall revenues from FY23, where it used to be 78%, it's gone up to 92%. The company heavily is relying on ash and coal handling division. And if you see the revenue growth of this particular segment, it has gone up from 1286 crore in FY23 to almost 2235 crores in FY25. Meaning in 2 years time, the top line for this particular segment has doubled. Now comes the question, why such a huge growth in this particular segment? So give me 1 minute of time. Have a look at this data here. What you note here is that the 70% of our electricity is generated by coal. When you burn coal, what happens? Ash gets generated. Now, if you look at the data, in India, every year 300 million tons of cash is being generated, right? But that is not the major problem. The major problem is the legacy ash we have in India. 1677 million tons of ash is lying in our thermal plants. This has been a big problem for government. Why? Because ash is polluting our environment. So what is government doing for this? So in 2022, what government did was, government said that polluter pays principle is what we are going to follow. Means any thermal plant that is polluting the environment, they will have to pay. They better handle this ash properly and they gave some targets. Again, I'm not going into details of this. You can read it on your screen. If the utilization rate is this much, they have to make sure that they have to clear this ash in 3 years time, 4 years time, 5 years time, and so on and so forth. Now, therefore, if you look at Reflex Industries Limited's top line, Since FY23, see what has happened. Their revenues have almost 2.5 times between 22 and 23. Why? Because all of a sudden these thermal plants started to ask companies like Reflex to handle their ash, right? So huge opportunity is definitely there in ash. And this company, Reflex Industries, what they have done, they have developed two solutions. Number one is tender management, second is trip management. Again, I'm not going into details of these, but very, very briefly, let us imagine NTPC, right? They generate a lot of electricity using coal and they generate a lot of ash. What they will do, they will issue a tender to, let's say, cement companies or road transport companies to say that, hey, come and take our ash and use it in your own operations. So basically NTPC is issuing the tenders. Now Reflex Industry, what they are doing is they have developed a tender management solution. Now this is not just an IT company, right? They have developed this solution, but they also manage the operations for these tenders. Second, likewise, trip management. So when this ash is taken away from NTPC various plants to various other locations, there has to be a transport management. And more importantly, this transport management has to be 100% compliant. Why? Because this ash cannot leak. This needs to be dumped properly. Otherwise, it is going to pollute the environment. Therefore, they have come up with these solutions. Again, I'm not going into a lot of details of the business model, but this will give you a good view, right? Now, coming back to the business mode of this company. If you look at the top management, Rahul Jain, what is he saying? Three things. That A, they have solved the problem of compliance. Number two, they have found newer ways to dispose this ash. For example, these are the guys who came up with using the ash in road and highways, right? This was the initiation done by them, right? Thirdly, if you look at it, they are pan-India. So this market is very, very fragmented. There are only unorganized regional players. But this company, Reflex Industries Limited, is the only listed player and they are the only organized player, and therefore they enjoy that particular mode. Now you'll say that, Rahul, okay, then what are the outlooks of this company? So if you look at this company, they're talking about increasing their capacity and they're saying that we are going to double this. Okay, Rahul, that is very, very long term. We don't know the timelines for that. What is the guidance for FY26-27? So what the company is saying is that they haven't given any definitive target, but they're saying in the next 2 years, we are likely to see substantial growth in coal and ash handling. Mind you, I haven't even spoken about coal handling. Otherwise, this video will go really, really long, but you get the summary of why I am talking about this particular business. Now you will say that, Rahul, if that is the case, why the stock have fallen down badly? Because of various reasons. For example, Q1 FY26, if you look at their revenues fell down, right? From 589 crore to it has come down to 365 crores. Why? Simply because there were monsoon related problems. Therefore, the transportation really could not work out because of the road conditions, etc. So this business is a very, very lumpy business. Please remember this. You will find quarters where they're not doing well. You will find quarters where they're doing extremely well, right? And therefore, stocks will come down and those may become buying opportunity. You have to understand the lumpiness nature of this particular business. Now, if I talk about the market share of this particular company, it is very, very low right now. And this is great opportunity. Why? Because they are doing only 345 crore to 350 odd crores, but the market size is around 75,000 crores, right? So they don't even have 1% of the market share. And what the company is saying is that in the next 3 years or so, organized player like us can definitely go to 10% or 15% of the market share. This is a huge statement that their management is making. Now, whether they can walk the talk, I don't know, right? But these are the things that you can read fundamentally, and therefore I'm sharing this with you. So far, if you're liking the video, hit the like button. While I move to the PE ratio of this company, the reason I'm talking about the PE ratio of this company is if I show you the chart here for the PE ratio, what you note is that this is currently trading at around 30 PE. Now, if a company is able to grow at, let's say, 20%, 30% growth rate, and the PE is 30, I don't think it is a very huge PE. Of course, this could correct further. I'm not saying that the PE may not compress. But right now, if you ask me, it is not overly valued from a valuation perspective. Now, the last point I want to talk about this company is the order book from a positive perspective. If you see why I'm seeing the reversal is possible, because in the last few months, 3 to 4 months, there have been a long list of orders. For example, here, 2 days back, 300 crore worth order. If I come down and talk about this one here, 474 crores of wind turbine order. That segment, I haven't even talked about it, right? If you come down further, you will see again here 43 crores of order, 25 crores of order, 47 crores of order. In the month of August, again, if you see 50 crores of NTPC order, right? 250 crores of ash disposal order. So there have been a lot of orders from June onwards. So the Q2 should be much better in my view. Let me now speak about the 2 or 3 negative points of this company so that you get both the risk and rewards. First negative point is that their promoters have pledged the stakes in the company, and you can see this pattern, right? Pledging is generally seen as a negative point. Why? Because promoters have pledged their stakes to raise funds. Now, if you do not invest in a company where the promoters have pledged their stakes, I totally respect your view. Don't invest in this particular company if that is the reason that you don't want to take entry into this particular company. Second reason is that if you look at the cash flow statement, you would note that in FY24 and 25, cash from operations has been in negative. It means they have been burning cash. Now, one of the reasons they have been burning cash is because they've been investing in their green mobility business that I've not talked about, but I'm not very worried about this particular point here. But again, if you don't like a company that is burning cash, then don't go for it. I'm simply sharing facts with you and you can make your decisions. But one thing I will tell you that you won't find a company that is perfect from all angles. And even if you are able to find a company that is perfect from all angles, the valuations will be highly crazy, like 80-90 PE, right? And then the chances of correction is always there. That risk is always there, right? Now, last point is that around 60 to 65% of their coal business or ash business is coming from NTPC. There is a high concentration risk here. And if tomorrow NTPC order slows down or cancels or whatever, then there is of course the risk for correction here. I've given you positives, I've given you negatives. It is up to you to make a decision. I'm not giving you a recommendation here, but hopefully you can go and explore this particular company further. Just a few days back, I wrote a summary note about this particular stock on my YouTube community. Community members now would get a clear picture as well. And if you want to join the community, you can go to my channel, find the join button and be my guest. Almost on a daily basis, I talk about various assets like stocks, mutual funds, ETFs, gold, silver, and whatnot. You're going to practically learn. I speak data so that you understand the logic and rationale. Feedback of this community has been excellent. Simply go to my channel, find the join button, and be my guest. With that, let me move to stock number 2 now. The second stock that I want to speak about is Zaggle Prepaid Ocean Services Limited. I'm sure you all are aware of this particular company. It's been a very, very hot and famous company. Why? Because it's given multi-bagger returns in the past, right? But right now, if you see the stock, from December 2024, at that time, it was all-time high of around 590. It's come down to almost 362 at the time of recording this video, which is almost a 38% of the correction, right? Now, if I talk about this company is actually a software as a service company operating in the fintech segment. But more importantly, the clients of this company is across the industries. Have a look at this list here. DTDC, CK Birla Healthcare, White Oak Investment Management, like from capital market to healthcare to logistics to everything. This is what really fascinates me about this particular company, that it is targeting every industry. It is industry agnostic. So the growth could be there. Now, historically, if you look at the fundamentals of this company, for example, the growth of the corporate customers, revenue from operations growing at 52% CAGR. If you look at the EBITDA and EBITDA margins growing at around 46%, look at the cash PAT and cash PAT margin around 51% growth in the last 5 years or so. So historically, very, very good fundamentals the company have delivered. Now, why is company growing at such a rapid rate? Let's understand the business model very, very quickly. If you see, there are 3 business segments here, right? So the biggest segment here is the Propel platform, which is giving them a lot of revenue, 7,218 million rupees. What is this? Very, very simply, if I take an example of, let's say, Hindustan Pencil, one of their clients. Now, if this client has a lot of employees, they have a lot of distributors, and if the company Hindustan Pencil wants to reward and incentivize these employees and distributors, let's say giving them some targets that if you achieve so much of sales, then we are going to give you, I don't know, some money or some vouchers or some coupons or whatever, right? All of that process is managed through Propel platform, which is rewards, gift cards, etc. This is quite a unique proposition in Indian market right now. Although Salesforce, ServiceNow, these softwares are slowly entering into Indian market. But right now, this is where the maximum revenues are coming. If you look at the growth rate, 68%, PAT, 98% growth rate, right? Second segment is the program fees, which is 5456 million, which is the second largest segment. Now, what is this segment? Very, very simply here, again, going back to Hindustan Pencil example, there are, let's say, I don't know, 2,000 employees of Hindustan Pencil. They are going to spend money, right? They're going to claim that money back from Hindustan Pencil, right? They might be traveling on work or whatever, right? Now, for those employees, what Zaggle will do is it will issue a prepaid card. It's not like a credit card. It's like a prepaid card where the employees can go and spend the money, and then that can be tracked by Hindustan Pencil. So that software is what this company implements, and in turn, this company takes a cut. So whenever an employee, let's say, does a shopping of 100 rupees, they might make 1 to 2% out of it, right? This is the business model. And third is the spend management, which is the normal claims management that happens for employees' expenses, etc., which is the third segment. But the growth is coming from Propel platform and this program fee segment, right? So these two segments are growing at a very, very fast rate. Now, if I talk about some of the other ratios of this particular company, debt to equity, very, very good. 0.01, it has come down. Return on equity on this company has not been very, very high, around 7%. But if you look at the return on capital employed, that is around 20%, which is very, very good, right? So overall, if you ask me, there is no huge stress right now in the balance sheet. But traditionally, if you read the commentary, what investors were saying is that if you look at the last 4 to 5 years, their cash flow conversion has been very, very bad, very, very negative, right? But I was reading their cash flow for FY25, and in fact, it is much better. They generated positive cash from their operation activities here, 198. Can you see this figure? It used to be minus 827 the previous year. So definitely from a cash perspective, FY25, they've done better. And the company is saying that they are going to build this continuous momentum and they're going to remain cash positive. And in fact, I was looking at their total cash position for FY25. It is positive 379 million rupees, which was much better than 79 million rupees the previous year. So from a cash perspective, they've made a significant improvement, and that's what the investors are looking for. Now, if you look at the company's growth guidance, around 35 to 40% is the growth guidance. This is very, very healthy. And they're also talking about expanding their EBITDA margin by 100 basis point for the next 3 years. So a company that is expanding their EBITDA margin, that is always good from a profitability perspective. Cash perspective, it's looking good. Historical performance, very, very good. Now, if I talk about the company's PE ratio, it is now trading at around 50. So a company that is growing or guiding for a growth of around 35 to 40%, PE of 50, it's not overly valued. Again, you can say that it could further compress and then that's a better opportunity for you, then that's your call. But in my view, 35 to 40% of growth rate with a PE of 50 is not a big deal at all. Now, if I talk about the PB ratio of this company, let's look at the PB ratio of this company, and PB ratio of this company is at around 4, which is all-time low. So from that perspective also, it makes a lot of sense. So I've given you all of these inputs. Please go and explore Zaggle as well. Look for the signs of reversals. And if you like the company, you decide it for yourself. With that, now let's go to stock number 3. The third company that I want to speak about is NewGen Software. A lot of you have been asking about this particular company from a long time. So I'll give you a very, very crisp summary here. So what you see is in Jan 2025, it was all-time high of around 1800. And from that price level, it has come down to almost 892, 50% fall. What has caused this fall? I'll speak about that in a minute. But if I talk about the fundamentals of this company has a platform called NewGen 1. Now this platform, you can read about this platform, but essentially, what is this platform? This platform automates the business processes of their clients. They digitize the business processes, and also they use AI in some sense to be able to help make some tactical decisions. Now, please don't invest in this company thinking that this is a huge AI company. No. It's a very, very basic level of automation, business process improvement that any company can do. Yes, of course, they've built a platform. Of course, they're selling it as subscription. All that is a very, very good news. But please understand that this is not a pure play AI company. People just look at the AI word and they go, okay, this company is an AI company. No, please understand that this is a very, very normal bread and butter for a lot of IT companies nowadays. It's not a rocket science here. But now if I talk about this company's growth rate in the last couple of years, if you will see here, revenues 24% CAGR growth, profit after tax almost 34% CAGR growth, right? So these are very, very good growth numbers for Indian IT companies. Look at what's happening with TCS, Infosys, Wipro, 4 to 5% of growth rate, right? And that too because rupee is depreciating. Here, this company is doing much, much better. It's sort of in the leagues of mid-cap companies like Persistent and Coforge. They're growing at a very, very good growth rate. This is a small cap company, has been growing at a very, very good growth rate. So definitely, historically, the company has done really, really good. Now, one of the other important point about this company is that around 56% of their revenue comes from annuity segment. Annuity is what? It's like every year the clients are paying that money. So it's like a recurring business. That means there is a predictability into the business, right? Therefore, this is a very, very good thing. And I like that about this particular company. Now you will say, what is the problem? Why is the stock crashed like anything in the last 4 to 5 quarters? Very simple explanation you will find in their earnings con call, which is that the company has not been able to get big deals or larger deals. For example, 20 crore, 30 crore, 50 crores, right? They are not able to sort them out. They're only getting tactical deals like 4 crore, 8 crore, 9 crores, right? And that has dampened the investor sentiments because please remember, if you go and have a look at the company's investor a shareholding here. If you see FIs, DIs, good stakes here, 17%, 9%. So it's quite a popular stock. And when the investors are seeing that the company is not able to get larger deals, what will they do? They will just book profits, right? And retail people will have no clue. And my intent has been that I bring you these insights so that you, retail people like you and me, are able to make decisions which are all backed by data. And if you like that, subscribe to my channel, because that motivates me, that I'm being heard by people. People are understanding, people are learning and making some useful decisions based on these insights, right? Now, again, going back to why I think that there could be reversal here. So let me talk about the last few months, just 2-3 months. If you note here, 18th of October, right? They got an order of 46 crores. Is this a large deal as per the company's statement? Yes, they were talking about 20 crore, 40 crore, 50 crore. This is a large deal. So are they able to now get back to the large deals? This is just one example. Have a look at this one here. 1st of October, they got a deal of around $2.5 million, right? 3-year deal. $2.5 million is how much? Roughly 15, 16, 17 crores. Again, you can do the maths, but yeah. I mean, this is again a large deal for their definition. 30th September, $1.6 million ka deal, which is again 10 to 12 crores, right? Have a look at this one here, a 5.6 million ka deal, 30th September, right? This is again a very significant deal. If you look at this one here, again 30th September, 1.3 million USD, that is again. So point is very simple. In the month of September, they have got significant deals. Again, if you go back to August as well, they have done pretty well, right? Here, 26th of August, 73 crores ka domestic order mila hai 2 years ka. All these numbers are very, very good, right? The stock crashed from January, and the reason was that they were not getting larger deals. But now, if you look at September month, they've got very good large deals. Now, they're about to publish their results in the next couple of days. I'm definitely going to watch the management commentary. What are they saying about the company's future prospects? And if I get a positive tone, you know what, this makes a good sense, because I tell you another thing. If you go back and look at the company's P ratio, okay, P ratio has now compressed from almost 80 ka P say now 40 P, okay, 50% P reduction. This is a very, very good. So a company that has grown their PAT in the last 2 years at 34% growth rate is now sitting at 40 P. Is that a good deal? You need to ask yourself. Although I'll tell you one thing here, if you look at their quarterly numbers, the previous quarter, the quarter 1 of 26, FY26, 321 crores versus 315 crores. It was a very, very flat quarter. So it ultimately boils down to these deals that I've shown you, how much of revenues they get converted into the next 2-3 quarters. My sense is that these deals are significant deals, and therefore they should get converted into good revenues. Of course, right now IT is, as a theme, has been beaten down badly, right? Because of a lot of things. But this company definitely stands out. I would highly recommend you to research this company, track it, and see, listen to the commentary. And if you find some useful entry points, do what you need to do. I'm not issuing the recommendation here, but this analysis that I've done for 3 stocks for you, I know it's a slightly longer video. Some of you say that don't create so long videos. Some of you say that, there is a value in these videos. So again, you decide what you want. I've given you crisp summary. I've given you data points. I haven't made things up, given you data-backed analysis. And if you like that, hit the like button. Let me know in the comments a simple thank you. Subscribe to channel, right? A lot of you are not subscribed to channel. You are going to miss out on some good content coming your way. Definitely subscribe to this channel. And if you want exclusive content, join my YouTube community. That's where I am teaching practically to my community members, and they are learning almost on a daily basis. I hope you enjoyed this video. If you did, like the video, and I'm going to see you in my next video. Until then, keep rocking.